Mixed data out of the US overnight, and with that we've got global markets displaying some tentativeness today. Your expectations on the local front, where direction is largely still being provided by international developments?
I mean, it's obviously that mixed data. We had poor pending home sales, but then on the manufacturing side, the manufacturing numbers were very good, and factory orders were very good. So it's always contradictory at the moment. We're trying to get the housing and employment to shift into the positive side in the States, and that will really give us grounding to go forward at a much better level than we are. So it is very tentative at the moment, but the factory orders coming through from the States was positive for our market, and I think that's why we managed to stay positive for the first half, the first half of this morning.
Some have highlighted that just looking at the local bourse, sitting at a PE of 17.2 times, where the long-term average has been around 14. The market is starting to look expensive. What's your view?
I mean, it's looking expensive on his historical views, and I think that currently sitting at 17%, if you look at some of the earnings going forward, they're probably more like at 19 and 20%. So you have to look very careful at what stocks you're picking, and you have to pick stocks that are trading below that 17 level as a whole. So you have to really be looking at individual sectors and stocks in those sectors to be able to outperform.
Let's take a look at your outlook for company earnings moving forward locally as we progress through this year.
Well, it's difficult, obviously, while the markets are so thin at the moment and we're not getting a clear view. Well, everybody's coming back from holiday probably only next week to get a real feel from what the asset managers are looking at as well. But I think that you have to really find fundamental improvements in the markets to generate what the market is expecting. So the stock exchange is expecting really good numbers, and that's why we're sitting at these high levels. But are the fundamentals there to really produce real earnings? I think on the banking side in South Africa, we have to, as we said yesterday, they have to start extending credit, and that's one way that they're going to get really good revenue coming into the banks. So they have to extend credit, and credit across the whole board into construction as well needs to come out. So it's going to be an easing of credit from the banking side that will help the economies, and then we'll start to get earnings coming through, as long as the reduction in unemployment.
Looking at some of the company earnings abroad, I mean, I mentioned earlier Ford, but Toyota as well, reflecting positive numbers, and that of course having implications for the platinum price, but also our platinum miners. What do you see the way forward being for our local platinum miners?
Well, I think the car industry in the States has been decimated, and any improvement there is going to help our platinum miners, and the price of platinum, you can see, has already recovered extensively from the lows of last year. I think that car market is essential to our platinum miners. We can see already today that people are coming to look at Boysendal mine from Northern Platinum in Mavella, and it looks like somebody wants to take that Mavella holding of platinum. So it does start to bring a little bit of excitement back into the platinum industry that we did see a year or two ago.
Of course, it's not just the platinum miners that we've got to consider here in South Africa. We've got the likes of Barloworld, the likes of Imperial, also possibly going to be seeing some implications. The fact that vehicle sales are rising as well.
Definitely, I think people underestimate the size of Barlow's holdings in the auto vehicle sector, as well as Imperial. And as that auto sector starts to improve, so will their sales start to improve globally as well. Caterpillar, if the mining starts to continue, is very big earnings for Barlow's, and it's something to look at. They were really hit hard last year. They've recovered nicely, but I think something to look for, and it's very highly geared as well. So once those start to recover, it will show a big improvement to earnings on Barlow's side. So I think it's something definitely to look at and a stock to look at for 2010.
Well, going back to corporate earnings, Rob, I mean, what's interesting is that we're starting to see corporate or companies actually innovating in order to ramp up their revenue streams. The Don Group is one example where it's now planning on actually diversifying that revenue stream. Talk us through that strategy and what the market has made of those plans thus far.
I think when you have very difficult economic times, you start to see the holes in your strategies, and you start to realize that being 100% focused in one thing sometimes is bad, and you have to start to extend what you do as a company. We see loss-making sections of companies that they just run with for marketing purposes, get thrown away, and then obviously with the Don Group, they're starting to expand just from outside, just being hotels, and extending that further. So you always have to be dynamic in your strategy, and if you can't only be focused on one individual product.
Do you see the JSE All-Share Index hitting that 30,000 mark before earnings start reflecting this expected growth, or would companies need to prove themselves first before justifying a run-up to these levels?
Well, logically, if you take a look at it, you'll have to see that the fundamentals start to come through and really improve to get those earnings to come through. However, logically, sometimes the market doesn't behave that way, and we can see already that we're so much higher than we really should be on a fundamental level. So it's difficult to say, but I do really think that the fundamentals eventually do come through, and you have to have very strong fundamentals to get those earnings to produce those earnings for the companies.
With that being the case, and many still waiting for those fundamentals to illustrate and to show itself, I mean, is adopting a defensive strategy right now the way to go? I mean, how would you be playing the market at the moment?
I think you have to look at a defensive stock that also has a bit of growth in it. You take a look at Aspen and you take a look at Tiger Brands, which are going to be spending 600 million locally, and they're also going to expand across the borders as well to expand that food industry. So I think you have to take a look at the sector. I think on the commodity side, food as a commodity is also going to be very something to watch and very exciting to watch, and I think those prices are going to move up as well, and that's going to help a company like Tiger Brands. So you have to be slightly defensive, but with growth. You do want to catch that growth when it does start to move. So you have to look at something defensive that has a growth aspect to it as well.
On that